Hello and welcome everyone to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, January 26th, 2024. Ron Quaranta here with my co-host and dear friend David Brill. Shout out to our co-host Josh Clayman, slightly under the weather. Traveling with the Gulf Stream has its effects, David, over and over again. So shout out to you, Josh. Please get well soon. Before we begin, thank you all for joining us on LinkedIn Live and on X/Twitter. I think we've also got a channel on Facebook now, David. I'm not sure. But thank you all for joining. If you've got questions, please put them in the chat. David and I will do our best to address them. And before we begin, obviously, please keep in mind, nothing discussed should be considered accounting, investment, legal, or tax advice, and everything that David and I are talking about represent our personal views and not necessarily the views of our firms. So with that out of the way, David, so much continues to go on in this space, and I joke about it every week. Every time we put the description for the next crypto roundup, it's almost always already out of date. How was your week? What have you seen, David? Let's talk.
Well, I've been fascinated. My voice has taken a little bit of a hit, so we'll push through. But really interesting volumes and price action with the ETF being approved. I think on the positive side, we've seen a lot of volumes. We did a little research, and I saw that 3 of the Bitcoin ETFs are in the top 25 of assets of all ETFs that started since 2023. So I think that's really positive. I think what we hadn't anticipated or broadly was that there would be bankruptcy estate selling. And we've seen that a lot of movement out of GBTC, a lot of selling in GBTC was a big crypto bankruptcy estate selling their holdings. And so while people were focused on the price going down of Bitcoin since the ETF was approved, I would really focus on that there was a lot of supply that's a kind of, we'll call like one-time unusual supply that was soaked up by the ETFs. So I think that's really a positive thing. And, we're seeing some reversal positively today. And I think there are probably some big, 1 or 2 big acquirers who are buying up Bitcoin, sub 40 and below, here in the low 40s, probably soaking up a lot of that supply from the bankruptcy estate.
David, it's interesting. I agree with you. And when I was looking at the data on, you and I've often spoken about it's buy the rumor, sell the fact. And we saw, a not insignificant sell-off in Bitcoin post the approval. I think at its bottom, it was 16% down. I am pleasantly surprised at a couple of things. One is, and I'm just looking at the data now, we're still holding well enough above 40. And I would imagine if this was a kind of global sell-off of Bitcoin, sell the fact, we would have broken 40 for a sustained period of time. And again, I'm not a technician from a charting perspective, but seeing Bitcoin hold 40, 41 for prolonged periods of time, in my mind, weighs positive for the overall market. I think the other thing that I was really fascinated by when you looked at the data flows post the approval of the ETFs, I think very rapidly, David, correct me if I'm wrong, I think it was within 48 hours, spot Bitcoin ETFs exceeded silver ETFs, for example, in the global marketplace. And when you looked at those fund flows coming in, it also put to rest the idea that there wouldn't be institutional interest. There is institutional interest, and it's interesting to see how that evolves over time. But did you see that same thing? Do you kind of agree with that?
I totally agree. And I think people are also forgetting that just because ETFs are listed, it takes time for RIAs to review it, to understand it, to get training on it. I think I saw a posting that Blackrock was doing some training for some of their reps at the end of the month. These take time. And also some, banks want to wait to make sure that the ETFs function properly, that they are tracking the spot price. So I really think because it is an unusual ETF and the first of its kind, that I do think institutions are just wanting to make sure they're kicking the tires, wanting to make sure the mechanics work before jumping in.
Sure.
And also, like I've said before, people aren't just all of a sudden having meetings with their financial advisors just because this got approved.
Right.
There's a cadence of those conversations. And I really think really have to look over a broader period of time than a couple of weeks. And then finally, look, I think a lot of smart money got into it. If they could buy it and were comfortable, either bought GBTC at a discount to NAV prior to it being approved or bought it spot knew there was going to be a run up with the approval and took some profits. So I think there are really some unique dynamics at work. A couple we didn't appreciate with the bankruptcy estates and the
Mhm.
miners selling so much, but I think it's really worked in an orderly way, and it's gaining momentum.
Yeah, no, I agree with you, David. Interestingly, I believe it was on Bloomberg. I'm sorry, I forgot who the reporter and the quote came from, but it was really this idea of the ripple on the pond of ETFs, right? Once the approval came, to your point, David, it was institutions get in, they've got allocations because they've got some of them seeded, some of them had institutional clients. The institutions more broadly get in as the mechanics of it become clearer and everyone's more comfortable with it, and then it ripples into the world of RIAs and then down into the CFPs and more retail stuff. So, to your point, I would argue that spot Bitcoin ETFs will continue to evolve over the coming months and years, even. But it is interesting. One of the other things I was surprised by, David, was kind of the race to bottom on fees. And I wanted to ask you, this is all public information, obviously. Grayscale had some pretty high fees relative to the other providers. And I wouldn't second guess the team over at Grayscale, but do you think they're making a mistake?
Well, look, they've obviously thought about this.
Hmm.
And look, in fairness, they are the ones who brought the lawsuit that really forced the commission's hand to move forward with this. And I can understand their view that they're entitled to some premium, perhaps.
Sure.
Um, I just think that the premium to what their current competitors are offering is extreme. And
Mhm.
so, people are going to make their own economic choices. But look, I think that this is a dynamic industry, and the one thing I think that's really important not to forget, and I talked to Bloomberg about this too, is that there's such demand and there's such wanting market share in this space that that sponsors are willing to cut their fees and really being competitive to get traction, because I think they all see the potential longer term and see the potential and much more assets under management coming under time. If they didn't feel that way, they wouldn't be doing that.
Yeah, no, David, it's a agreed, and it's a good point. I wanted to ask you. You talked about the premium, and the GBTC Grayscale lawsuit against the SEC really was the catalyst, although it took some time, that precipitated the approval of spot Bitcoin ETFs. The segue into spot ETH ETFs that we've seen now, and publicly available information. Obviously, I believe the SEC postponed a decision on spot Ethereum ETFs until, David, correct me if I'm wrong, I think it's March. And immediately some of the commentators in this space said, well, will Grayscale sue in the same way they did for spot Bitcoin ETF? I'm a little hesitant to believe they might, but what do you think?
Well, I think first thing we have to do is see if the applications are denied and on what basis they're denied. So I think that's important to understand. And obviously, as a you know, looking at it from the ecosystem point of view, we don't want to see those denied.
Sure.
But I think it's important to see what the reasons would be if it were denied, and then sort of take it from there.
Mm.
I think what's really important is that if this Bitcoin ETF acts the way and operates the way it's expected, and there are no real hiccups with volatility or NAV prices, I think that will be really a helpful data point,
Yeah.
because market manipulation has always been one of the themes that commissions focused on. And so if we don't see that with the price of the ETF in a properly functioning market, I think that'll be really helpful. Bitcoin is different. The SEC hasn't been, you know, they've kind of wavered on whether they thought it was a security or not. I think most of us feel, since there's a futures ETF in Ethereum, that they're not taking the position that it's a security. But it's not a fait accompli. It's going to get approved soon. I think a lot of people want to see that happen, but I think it would be wrong to just assume that it will happen without more iterations and more back and forth with the commission.
Yep. The saga continues, David. And again, for everyone in the audience, thank you all for joining us. But these things take time. We'll be talking about some of these for many, many months. What else, David? What else is going on?
Well, what do you think, Ron? I mean, do you think we'll see any ETF this year? I mean,
Uh,
do you want to see one in the marketplace? What do you think about it?
well, look, as a proponent of the ecosystem as well as the compliance um, implementation of that ecosystem, and you and I have always often spoken about investor choice, but also investor protections, which I think are very, very important. And I think if there's a futures Ethereum ETF out there predicated in the same way on the data sources and the capabilities that you might include for a Bitcoin futures ETF, why shouldn't there be a spot Ethereum ETF? I mean, and I look at it in two different camps, right? To me, talking about Bitcoin and Ethereum, and we can have complicated legal conversations about why it isn't or is sufficiently decentralized. David, you and I, you co-hosted with Sam Enzer our listen party to SEC v Coinbase, and one of the comments we heard was, "Well, Bitcoin is not a security because it doesn't have an ecosystem behind it." I'm not sure I understand that logic, but
Yeah.
I tend to look at Bitcoin and Ethereum in very different buckets as almost everything else, excluding things like stablecoin and DeFi are separate conversations. Unless there is significant risk that the SEC is not expounded upon, I would be pretty surprised not to see an Ethereum ETF. It's the when in my mind that I think is important, but the regulators have had no shortage of being able to surprise people with their reasons for rejecting things.
Yes, some commentators have said they've seen some extremely creative arguments posed in some of these hearings, and arguments with statements without any legal precedent behind it. So it is interesting. I think the courts, when we talk about the Coinbase hearing, and I was grateful to be with Sam and you and fellow WSBA members. It really was enlightening, and particularly with how the Judge Failure, really asked thoughtful questions and provoking questions of the parties. And I think, for people who are interested in the space, to the extent you can get a transcript or read a summary of the hearings, I think it's really, really important, whether you're a lawyer, whether you're an investor, whether you're just somebody who's interested in the space, because it really boils down to some of the legal arguments that a number of us have been grappling with. And
Yeah.
the idea that Bitcoin doesn't have an ecosystem is just, I don't think that's consistent with the facts on the ground. And we know about the Ethereum Foundation, and so I think that factually there were some things argued that aren't consistent. But I think there's a real bigger question about, well, what's a collectible, and where's the line between collectible and security? And we talked about it last week, but I think it's a very difficult argument for the commission to draw the line, because like we talked about,
Yep.
people buy football cards or football memorabilia. The NFL Players Association and the NFL benefits from that, and and things like that. So I think that I think it's going to be really, really interesting to see how these arguments go. But enough on the legal side. Like looking into the markets generally,
Yeah.
Ron, it doesn't seem like we're going to get as many rate cuts right away as people have been hoping for. What do you think about that? And where do you see, you think that'll affect people investing in crypto?
Yeah, it's a really good point, David. And you and I often have the markets-based macroeconomic conversation. And for those of you watching who may not have seen, Q4 GDP data came in for the United States, and it reported annualized GDP growth of, I believe it was 3.1%, 3.3 for Q4. So the American consumer is strong. The economy is, if not cruising into a soft landing, certainly moving forward. I think there are a couple of different macroeconomic trends, David. And if you look at the dispersion of estimates, right? Like every firm, every brokerage firm on Wall Street and every research firm comes out with their estimated number of rate cuts that the Fed will put forward next year. Some have gone to 0 or 1. Some are saying there'll be 4 rate cuts. Look, the truth of the matter is, in an economy that is still vibrant in the face of, what were the prior supply disruptions, in the face of higher interest rates that the Fed's put forward. And I think, what was the benchmark? 40 years, the highest interest rates are 30 something years, David. There is something to be slightly worried about, because if we begin to see consumers continue to spend and the economy to continue to grow, disinflation will slow. So what does that mean? I think if interest rates are not able to come down, investors can seek yield and APR and not necessarily need the risk profile of something like crypto.
Yeah.
there are the folks at the edges of this that allocate 5% or some kind of speculative amount. There'll always be those, but we need to see a lower interest rate environment to drive people that might be more interested in what is still considered a speculative asset. So that's kind of what I look at. I'm one of the few people who's a non-economist, David, that
Mm.
is watching Fed statements every quarter and is watching kind of releases from the Bureau of Labor Statistics, for example. Do you agree?
So, like, while I'm very bullish on crypto,
Yep.
long term, I
Agreed.
still think that you know, we may see a little improvement here, maybe to 43, 44, 45,000, but I still expect to see a sell-off in the first quarter. That's kind of the way I'm thinking about it. But I think when that sell-off comes, for those who have conviction, it'll be an amazing time, an amazing entry point for longer term holders.
Yep.
And I've been looking at like the 32 to 34,000 range, and Bitcoin and 17, 1800 and Ethereum as like great entry points if we get there.
Yep.
I don't want to see that happen, but that's kind of the way I think about it.
Yeah.
Regarding the economy, like, I obviously want to be really bullish. I want things to flourish, but
Sure.
I just feel like the consumer, and I feel like people in some ways are overextended.
Mm.
And there's like this high credit card rate delinquencies. I think the commercial real estate market has to have some kind of reckoning that hasn't happened yet with banks, so I think there are these big macro trends out there, and I think the other thing is what happens in the Middle East, and does that
Mm.
kind of become a broader conflict, and what effects does that have on the economy?
David, that's it. So a couple of things there, and I absolutely get your point. And Mohammed Al Aryan was on Bloomberg Radio this morning. He's an amazing economist. One of his perspectives was that consumers are also spending down their savings coming
Yeah,
out of the pandemic and coming out of the relief that they might have had. And arguably to the point about conflict, and you can't talk macroeconomics without looking at the geopolitical implications of it.
mm,
I had someone, they call economists or economics what the dismal science. Remember back in the day, David, right? We're arguably one black swan event away from, are we looking at spiking inflation because of supply chain disruptions? Think of, shipments through the Red Sea, for example, and the other stuff that's going on. So again, I don't want to sound dismal. Long term, I'm I'm very pro Bitcoin. I'm very pro where this marketplace is going. But to your point, there'll be kind of some of the volatilities. I will share with you my contrarian indicator, David, if I could.
sure.
You and I often focus on the contrarian indicators, and you and I have joked about the inverse Jim Cramer fund that we should probably set up
Yeah.
at some point. I think I found the scam contrarian indicator that tells us we finally clear out the dregs of the scammers in the world. Uh,
Okay.
some of you might have seen the news, and I haven't dug too deeply into this story. The headlines and the blurbs were bad enough, but apparently, a Christian pastor somewhere in the United States, I don't even remember where, set up an exchange and sold some kind of token and raised $3 million, allegedly for revitalizing the church, I believe, and doing some other stuff. And they took the $3 million and spent it on fancy handbags and improving his house, etc. And of course, got arrested by the DOJ, as I recall. And again, I don't know the specifics of the case, but if you're a pastor who scams people in crypto and launches a token in an exchange that's barely working, and your default strategy is to claim that God told you to do it, that is the bottom of the scam barrel in my mind. And I'm hoping scams just start to fade into the background.
Look, I think for the majority of them, they will. I think the issue is more, I think I'm more focused on security right now.
Yeah, agreed.
Like, my company, we're really helping, you know, companies and individuals tracking and tracing crypto, and,
Yeah.
things of that nature, and breaches and things of that nature. So I feel like the threat vector is in the security side. I
Yeah.
think people also need to just do a little bit of their own homework. Have to read things a little bit and just think about what somebody's telling you. And if a pastor at a church thinks that's a good idea to start a new token, what what's behind it. I think
Yeah.
everyone just has to have a little bit of skepticism when they read things that just seem a little bit too good to be true. And I think a little bit of that skepticism would have been healthy when some of the different platforms were offering, like, double digit or 20% returns on money or value. I think it just has to be that questioning eye a little bit, and just not an assumption, and a
Yep.
little bit of kicking everybody.
David, agree. Caveat emptor applies across the board. And it's a weird balance, right? Because we want people to have the freedom to invest in the things that they're knowledgeable about and comfortable about investing. On the other side of that is do your homework, which I think is really important. The other thing, David, that I've been looking at with renewed interest, the yields. Let's rip up the script a little bit, right? Let's talk about DeFi.
Yeah.
And the yields in DeFi are beginning to rise, and we're beginning to see some interesting institutional positioning there. What I'm worried about is the ridiculous yields that kind of got us into the frothy land of people expecting 20, 30, 40% returns, APYs, for example, that were houses of cards in many instances. Are you as concerned as I am?
It's really interesting. I really want to dig into some of these and figure out the math and see how it's working.
Mm,
I I am skeptical of that whole thesis about having being able to offer such, great returns and sort of the yield farming at a very high level.
no.
I mean, I do understand that, there are different protocols that will be offering airdrops, and people want to, participate on those protocols to get the airdrops. But I think people just need to do their homework. Like, as much as I like, chasing yield, I'm very, I really look at it carefully when I can't make the math work. And so I think people just need to be careful and just thoughtful. Like, I don't think I'm not casting dispersions on any
Sure.
protocol, but just be thoughtful about it. But you're right. I mean, the algorithmic stable coins do not work. We've been down that road before.
Yep.
So I think there's a healthy dose of just being thoughtful about what they're doing. But I mean, I really do see this next wave of protocols that are offering airdrops and the ability to earn some of these tokens through activities, like really driving some of the big
Mm,
protocols.
yeah.
Like, I think Solana and Avalanche and a few of the other really big protocols are going to see a lot of new tokens and new protocols build on top of them, and I think you'll just see a lot of activity.
And
Like, I
David, to that point,
yeah,
a lot of what you're talking about there, and again, you and I aren't recommending either Sol or Avalanche, but what
no,
what I think is important in the archaeology and in the research you're talking about is the use cases associated with them and the
yeah,
platform work that's happening behind them. So when you look at that ecosystem of participants, they're building something that has use, and they're building something in the backdrop of an ecosystem that could deliver value. So again, it's to your point, do the homework. And the other, the one other thing I'll add to that, David, and I'd love your correct me if I'm wrong, but when I see folks that are talking about, we get these calls all the time. Hey, 30% APY on this platform someplace. I should be doing this. Look at the yield. That kind of yield is, in a logical world doesn't come from nowhere. So to me, it's always what's the other side of that makes that business model work? And 9 times out of 10, most people will not be able to answer that question. If you can't answer that question, to me, that's something to stay away from.
yeah. And when I talk about some of these protocols, what I think is really important is you're seeing, like, the average daily users on these protocols that continue to grow, and they're
Yeah.
continue to building on these protocols and expanding the use cases for them. So I think that's really important. Yes, you're right. I think, the yield thing, I think everybody just needs to be thoughtful about that. But I think one of the things, Ron, is that, we're continuing to see really good use cases for these protocols. And I really think, some of the narratives around gaming and supply chain and AI are just continuing to be built out. And I continue to be really bullish on those for this year. I'm really looking forward to seeing tangible things from those protocols and those ecosystems. And the whole gaming, I continue to be, again, I'm not a gamer, but I continue to be excited by, the games being built on blockchains and
Yep.
interoperability and people being able to buy things on different gaming platforms and transfer them and just having ownership of them. I really think that's a great use case.
Yeah, David, we'll probably need to do an entire gaming slash Web3 session. And the news that caught my eye recently, and I haven't read it entirely yet, is do you remember Doom back in the day? You and I
Oh,
go back a while, so I remember Doom, and someone uploaded it to the Doge blockchain. If it was a Doge, one of the blockchains, as I recall correctly. So it feels like a little bit of ham-handedness there, but again, to your point, the gaming world is a $1 trillion industry globally. I'm probably overstating that.
no, it probably is. And the one thing is people always are willing to spend for their kids, and I'm sure there are a bunch of adult gamers too. So I think that just continues to be a growth area. And I expect like when we go to consensus later on this year that
Hmm.
that'll be that and AI will be two of the really interesting themes that we'll see a lot of people talking about there.
Yeah. Yeah, and that overlap, you brought up AI. One of the things we're going to be researching a bit, David, is the overlap of blockchain and AI. Someone had posited, I think it was in Forbes. I'll double check the resource and include it in the show notes. That blockchain technology could be used to manage the veracity of what AI is developing. I think AI is a very complicated ecosystem, and we have a lot of people weighing in on things like AGI and beyond, and kind of inherent biases and stuff. So it's very complicated. But if blockchain capability can be an I don't want to use this word lightly, but an insurance layer around the truthfulness of data being disseminated through AI, that's an important thing, and that'll be again another one of those multi-generational conversations. David, we're going to wrap it up a bit early. I just wanted to run one more thing by you if we could, and we should probably spend a little time at our next legal working group meeting. The SEC v. Binance case recently had a court hearing on Monday, I believe it was. It was not publicly open, but there's been news reported on it. Did you want to chat about that a little bit?
Well, the one thing I would talk about there is that you know again the judge in that hearing talked about not wanting to make a determination about, I believe, 10 tokens and whether they were what their status was without those token issuers being present.
Right.
And I think that's a really important due process issue that is not getting enough attention. And a lot, heard it in several places, but I don't think from a due process perspective that determinations on whether a token is a security or not should be made unless the issuer has standing to be uh, part of that judicial process.
Yeah.
Those token issuers have a right to defend themselves and to present facts on their behalf. And when you have an exchange who's a third party who's really not representing the issuer, I think that's problematic. And I saw that the judge had sort of felt the same way.
Yeah. David, I'm going to ask you to make a prediction. Will we be talking about major questions doctrine next week?
No, I don't think we're going to be talking about major questions doctrine next week. I think next week will be really interesting with regarding to price action and do we kind of stay in this range? Do we top out? Now that we've seen the selling and grayscale stuff, what is somebody going to come in and start buying a lot, or what are we going to see? So I think next week will be a really interesting way to sort of end the month and see where the volumes are and where the price action is.
David, I agree with you, buddy. I'll continue, and I'm going to continue to watch the macroeconomic data as that comes
Yeah.
in as well. It'll be interesting to see kind of the impact from the investor and the market's mindset. David, let's wrap it up there. It's busy. It's a busy time for all of us. I cannot believe we're rounding out the first month of 2024 already. Where does the time go? Shout out again to Josh Clayman, who couldn't join us. Feel better, Josh. We'll see you next week. David, my friend, always a privilege. If anyone has additional questions for the WSBA, for David or I, info@wsba.co, and we will see you next time.
Yes, actually, I'll be in DC next week, so you and Josh will be holding down the fort, but I'll absolutely be watching, and I'll look forward to hearing you and Josh weigh in.
And we may have a special guest that we're still working on, David.
Yes, you'll have
Take
to
care,
tease a
everyone.
special guest.
You got it. Have a great weekend, everyone. Cheers.
Take care.